Hello, this is Dr. Annette Moultrie, and this is part 2 to chapter 1, Core Concepts of Accounting Information Systems, 13th edition, Accounting Information System and the Accountant. By this time, you should know the career opportunities that are available to accountants who also have technology skills and understand the impact of technology on the profession. Now we will look at the terminology surrounding accounting information systems. What exactly do we mean by information systems? And why do we care about the difference between information and data? Now, the Accounting Information System, AIS, it stands at the intersection of two disciplines, accounting and information systems. The study of AIS is often viewed as the study of computerized accounting systems. The Accounting Information System is a collection of data and processing procedures that creates required information for its users. Now, by this time, you should have a pretty good understanding of accounting because you should have taken one or more courses in that area. Now, the accounting field includes financial accounting, managerial accounting, taxation, and so on. Accountants must determine how best to provide the information contained in an AIS to support business decisions. AIS also create information that is useful to non-accountants, such as individuals working in marketing, production, or human relations. The term data and information, now they are often used interchangeably. However, they do not mean the same. Now, data are raw facts. They're raw facts about events that have no organization and very little meaning. For example, a set of raw scores of student grades. To be useful or meaningful, most data must be processed into useful information. Raw data are also important because they mark the starting point of an audit trail. And of course, we know an audit trail is the path that data follow as they flow through in an accounting information system. Now, despite the potential usefulness of some unprocessed data, most end users need financial totals, summary statistics, or exception values. They need that processed data in order for them to make decisions. Here is an illustration of the components of an information system. Now, this figure that you see, it illustrates a model for processed data. It is a three-stage process in which 1, raw and or stored data serve as the primary inputs. 2, processing tasks process the data. And 3, meaningful information is the primary output. An accounting information system typically performs the necessary task in each step of the process. In addition to collecting and distributing large amounts of data and information, accounting information systems must also organize and store data for future uses. However, this can be overwhelming for users. While computers are efficient and useful tools, they can also create problems. One is that computers do not automatically catch the simple input errors that humans make. Another problem created by computers is that they make audit trails more difficult to follow. Now, this is due to the path that data follows through computerized systems is electronic. Organizations recognize the need to integrate the data associated with their functions into large seamless data warehouses. Now, this integration allows internal managers and possibly external parties to obtain the information needed for planning, decision-making, and control, whether or not that information is for marketing, accounting, or some other functional area in the organization. To accomplish this task, many companies are now using large, expensive enterprise resource planning, or ERP. It's a software package that integrates their information subsystems into one application. Software companies such as SAP, SAS Institute, IBM, and Oracle, they have recognized the need for integrated information and therefore developed business intelligence software to meet this need. As a result, a software developer are including predictive analytics features into their main software suites. These analytic tools include a variety of methodologies that managers might use to analyze current and past data to help predict future events or trends. Information technology refers to the hardware, software, and related system components that organizations use to create computerized information systems. Information technology has been a major force in our current society and now influences our lives in many personal ways. When we use digital cameras to take pictures, we access the internet to make a purchase, or just for educational purposes. Another is that we use emails. We use emails to text our friends and families. It is perhaps less clear that computer technology has also had profound influences on commerce. In our current information age, fewer workers actually make products while more of them produce, analyze, manipulate, and distribute information about business activities. These individuals are often called knowledge workers. Companies find that their success or failure often depends on the uses or misuses of the information that knowledge workers manage. Accountants have always been in the information business because their role has been, in part, to communicate accurate and relevant financial information to parties interested in how their organizations are performing. Now, this includes the increasing importance and growth of e-business. E-business is when you're conducting business over the internet. And e-commerce. And what is e-commerce? E-commerce is a subset of e-business, which refers mostly to buying and selling on the internet. Here's a question for you. Which of the following is likely to be information rather than data? Is it A, sale price, B, customer number, C, net profit, or D, employee name? And the answer is net profit. Net profit is more likely to be information rather than data. Here's another question. With respect to computerized accounting information systems, computers, A, turn data into information in all cases. B, make audit trails easier to follow. C, cannot catch mistakes as well as humans. Or D, do not generally process information more quickly than humans. Which one is it? A, B, C, or D? And the answer is C. Cannot catch mistakes as well as humans. So what's new in accounting information systems? In Chapter 2, we will identify the basics of cloud computing. But in this segment, we want to discuss why this technology is important to accountants, and then describe some of the current issues surrounding cloud computing as it relates to accounting professionals. So what exactly is cloud computing? According to Ron Gill, cloud computing is a way of using business applications over the internet, like you use the internet for your bank's transactions. Sustainability reporting focuses on non-financial performance measures that might impact an organization's income, value, or future performance. A number of suspicious activity reporting, or SAR, a number of suspicious activity reporting laws now require accountants to report questionable financial transactions to the U.S. Treasury Department. For example, transactions that are suggestive of money laundering, bribes, or wire transfers to terrorist organizations. Now, we touched on forensic accounting earlier in part 1 of this presentation. Forensic accounting is a career field that is important and it's growing. This area of accounting has become a popular course at many universities over the past decade. And some universities now have a number of specialized courses that are included in a fraud examination track or a forensic accounting track, so that students may specialize in this area of accounting. Now, although corporate scandals are hardly new, the latest set of them has set records for their magnitude and scope. Of particular note are the Enron scandal and the case against Bernard Madoff. The Enron scandal is important because of the amount of money and the jobs that were lost, and also because of so much of it appears to be directly related to the adroit manipulation of accounting records. Study break 5. Here's a question. The acronym SAR, S-A-R, stands for A, simple accounting receipts, B, suspicious accounting revenue, C, suspicious activity reporting, or D, standard accounts receivable. Which one is it? A, B, C, or D? And the answer is C, suspicious activity reporting. Okay, here we are at the end of chapter 1, I'm sorry. Summary, there are many reasons to study accounting information systems. And one of the most important is the availability of many exciting career opportunities. A forensic accountant combines the skills of investigation, accounting, and auditing to find and collect pieces of information that collectively provide evidence that criminal activity is in process or has happened. Information technology affects virtually every aspect of accounting, including financial and managerial accounting, auditing, and taxation. Information technology refers to the hardware, software, and related system components that organizations use to create computerized information systems. Computerized information systems collect, process, store, transform, and distribute financial and non-financial information for planning, decision-making, and control purposes. Data are raw facts. Information refers to data that are meaningful and useful. Accountants and other managers are using predictive analytics, which is a technique that takes advantage of data stored in data warehouses to improve performance. Cloud computing is a way of using business applications over the internet. The basic concept of sustainability reporting is that a company focuses on non-financial performance measures that might impact its income, value, or future performance. By law, the accountants in many Pacific financial institutions must now file suspicious activity reports that document potential instances of fraud, money laundering, or money transfers to terrorist organizations. Now, this ends chapter 1, and I must say this disclaimer again. I do not own the copyrights for this presentation. The references are here. The content for this chapter 1 is taken from the book Core Concepts of Accounting Information Systems, 13th edition. The authors are Simpkin, Norman, and Rose. The publisher is Riley and Son. Thank you.